Apologies. We were live for about 4 or 5 minutes and had some technical difficulties, so we're back. We're going to take it right back from the top. We're going to start with the markets, which hasn't really changed in the last 5 minutes, but we'll talk about it anyways. Bitcoin sitting at 102,859. Ethereum sitting at 2533, up about 22%. Solana sitting at $170, up about 6.32%. Total market cap of Bitcoin sitting at $2.042 trillion. Our total market cap of crypto sitting at $3.17 trillion. Fear and greed at 53. This is the Defion Productions podcast, the only live stream podcast in the Niagara Falls, Western New York area. I'm your host, the hardest working nobody in Bitcoin, Don. We're going to be hitting a couple of the big stories from the week and from the last 24 hours because a couple of big stories have been released in the last 24 hours. We're going to talk about the Coinbase leak. We're going to show a clip of Brian Armstrong talking about what happened and what he plans to do moving forward. Big news right before we went live today in regards to a Middle Eastern country buying some MicroStrategy, getting some exposure to Bitcoin through their sovereign wealth fund. So we're going to talk about those couple of stories. We're going to start with two of our sites here. We'll start with Free Cash. Talked about it last week. I want to just show this real quick. This is the site that I'm using to earn free Bitcoin. I made a video last week on the podcast to show my referral link if you want to get it and you want to start earning. I've earned almost $4,000 so far on this site. These are some of the apps I've downloaded and played and earned funds on. The referral link will be in the link of this podcast when I upload it. And the other thing that I want to show you guys is Gemini right now. If you do not have a Gemini account, if you're into Bitcoin or into crypto and you do not use the Gemini exchange, now would be a perfect time to sign up. And if you do and you use my link, you and I will both get $75 of free. I'll take Bitcoin, obviously, because I'm the Bitcoin maxi. You can take whatever crypto of your choice, but it's the biggest offer on the Gemini exchange. And again, I would suggest put $100 on Gemini, get your $100 of crypto, get your 75 from Gemini, take your 175 off the exchange, put it into cold storage, and you made a 75% return on your $100 investment. That's what I would suggest doing, especially if you don't like exchanges or you don't use Gemini. This link will also be, it's on my X right now if you want to go to my X and click on that link from May 11th. But I'm going to put it in this description of this video as well. I've had a couple people already do it, already sign up with it. They're getting 75. I'm getting 75. It's free money. I don't know why you wouldn't want to do it if you don't already have Gemini. Even if you don't like exchanges, it's just an easy way to get $75 of free Bitcoin or $75 of free crypto. And you literally only have to put $100 on the site. And then you get your 175, your 100, their 75, and you can take it and put it wherever you want after that. Got all that stuff out of the way. Let's go to our first story, which is a major story right now in crypto. Coinbase, which is a rival exchange of Gemini, had a big data leak recently. And this is Brian Armstrong, the founder and CEO, making a statement that he posted to his X account, posted to Coinbase's X account to talk about what happened and what their plans are moving forward. It's a 2-minute, 44-second clip. I'm going to play it all the way through so you guys can listen to it and we can digest it and talk about what we think after.
Aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. Now, we like to do things transparently here at Coinbase, and so I'm going to respond publicly to these attackers by saying, no, we are not going to pay your ransom. In fact, I have a few next steps in mind that I'm going to share at the end of this video. But for the rest of you watching, wondering what happened, we did an investigation here, and these attackers have been approaching our overseas customer support agents, looking for a weak link, someone who would accept a bribe in exchange for sharing some customer information with them. Now, our support tools have limited access to customer information. There was no passwords or private keys or funds accessed as part of this. But customer support agents do have access to personal information like name, date of birth, address, etc. And attackers still want access to this information because It allows them to conduct social engineering attacks where they can call our customers, impersonating Coinbase customer support, and try to trick them into sending their funds to the attacker. Now, unfortunately, they were able to find a few bad apples. Our systems are designed to mitigate the impact of something like this, so less than 1% of our monthly transacting users had their records accessed, but this is still unacceptable, and I want to tell you what we're doing about it. So first, any customers that were socially engineered as a result of this incident, we're going to reimburse them. There's more details on our website, on our blog post about the reimbursement process. You can read more there. Any customers who have been impacted by this or have been notified at this point. Number two, we're hardening our systems around customer support to make something like this much more difficult in the future. And third, we're actually relocating some of our customer support operations as a result of this. But the last step is maybe the most important, which is that instead of paying this $20 million ransom, we're turning it around. And we're putting out a $20 million award for any information leading to the arrest and conviction of these attackers. For these would-be extortionists or anyone seeking to harm Coinbase customers, know that we will prosecute you and bring you to justice. And now you have my answer.
I don't know if full transparency, I've talked about this on the podcast before. I don't use Coinbase. I haven't used Coinbase since 2016, I think, or 2016 or 2017 is the last time I used Coinbase. But I do still have an account with no assets on it. Late Tuesday night, I got a random text message. Now, I never get text messages from Coinbase, but I got a random text message on Tuesday night from Coinbase telling me that somebody in Minnesota was trying to log into my account. So I thought that was kind of weird because I never get anything from Coinbase. And then I see the news breaking that data was released and all this kind of stuff. And Armstrong is saying that only 1% of data was leaked. I find that kind of hard to believe if randomly I got that text message Tuesday night and I never use Coinbase. I haven't transferred funds in 8 years on that site. And I got, my phone number appears to be compromised from getting that text message. So that I find that kind of odd. It appears that he's being transparent by putting this out and getting ahead of it. But I find it hard to believe that only 1% of users are being affected, unless he means only 1% of users had actual funds taken from their accounts. Maybe that's what he means, but I only 1% of data being leaked. I find that very hard to believe. I'm not very trusting of Coinbase or Brian Armstrong. Anyways, that's my personal feelings. But it's a story. People are talking about it. It's all over social media, and we got people talking in regards to the self-custody conversation again, hot wallets, cold wallets. I did get a request this week from one of our loyal watchers, loyal listeners, a friend of mine that sent me a message, and I said I would cover it on the podcast in regards to different kinds of wallets. So I'm going to talk about that really quick, kind of give a little rundown between the difference between different kinds of wallets that you can have, difference between hot wallets, difference between cold wallets, the exchange wallets, between self-custody wallets that you hear us talk about sometimes. When you have your money, when you have your assets, your crypto assets, your Bitcoin on an exchange like Coinbase, they have the private keys. You do not have the private keys. You have the public keys. That's a hot wallet because that's on the internet. It's got direct internet capabilities. It could be compromised. It can be stolen. It could be siphoned. It could be taken because it's got a direct internet connection. That's a hot wallet. And that's also a wallet where you do not have control of it. Coinbase or Gemini or whatever institution, exchange that you decide to use in your jurisdiction, they have those keys. If you have a ledger, if you have a cold storage device, That's a cold wallet that is not necessarily connected to the internet, and you have the private keys to that device. Usually some sort of passphrase, 12 seed, 24 seed passphrase that you have that gives you access to your private keys. Most of the time, that will be not connected to the internet, although there are self-custodies that can be hot, can be connected to the internet, but mostly those are cold wallets and cold storage. I do know, or I don't. I shouldn't say I know because I don't use Coinbase anymore. But I know they used to, at least in 2016 and 2017. There was an option on the app where they had a vault, like a cold storage vault, where you could choose to take your assets that you had and have Coinbase put them offline into their cold storage vault so they weren't hot in their hot wallets. So it made it less likely that they could be compromised or seized. I don't know if they still do that, but that would be another example of something that would be cold or wouldn't be directly connected to the internet. Hopefully that answers Jeremy's question a little bit. Jeremy's our listener that reached out to me to ask about that. I'll message with Jeremy later on and give him a little bit more of in depth, but that's basically the gist of it between the hot and cold. You can do a search kind of like I did, and there's a lot of information that will go in depth in between the difference between a hot wallet and a cold wallet, use cases, the convenience aspects, the recovery options, cost, and then some of the examples that you can use as well for those types of wallets. On to our next story. This one broke recently, today. The Saudi Central Bank holds over 25,000 shares of MicroStrategy, according to its latest SEC 13F filing. The first comment that you see here kind of encompasses my thoughts. Why not own Bitcoin instead? And then the second one, that's not even crumbs. You gotta understand this cycle is gonna be very heavy institutionally driven. It's already been very heavy institutionally driven. It will continue to be heavy institutionally driven. These institutions and sovereign wealth funds are going to go traditional routes when they're getting their Bitcoin exposure. That's the big reason why these ETFs were created, for these, traditional investors, institutional investors, to get easy, quick access to exposure to Bitcoin without having to worry about, the conversation that I just had. Hot wallets, cold wallets, storage, exchanges, self-custody, all that kind of stuff. They can just own the ETF and get the same sort of Bitcoin exposure by doing it through traditional paths that they've done to get other assets, other types of ETFs that they've had before. So a lot of this exposure, this Bitcoin, quote unquote exposure, is going to be through these types of vehicles, the ETFs, and MicroStrategy and 21, Jack Muller's company. This is how you're going to see these institutions start to get their exposure. I don't have the chart here. Let me see if I can find it. Maybe I'll try to find it in a minute, but there's a chart that's making its ways around social media that's a little bit depressing. It's showing the flows of Bitcoin from individuals and where it's going through to these sovereign wealth funds and these institutions like MicroStrategy, like BlackRock, like some of these sovereign wealth funds that are actually buying actual Bitcoin. There's a big outflow from individual owners to these, big institutional organizations of Bitcoin, and it's the part that I don't really like. It's unfortunately the inevitability of the adoption curve. Individual people are just slow to understand the shift, the tectonic shift that's happening in finance. And unfortunately, it's like being in a movie theater and seeing somebody run, You instead of just running with them, you kind of look to see why they're running before you actually start running. When if you just start running with the people that are running, and then you're much better off than waiting to see why, and then you get annihilated when you find out why they were running instead of just running with them. It might be a poor analogy, but you kind of get the gist of it. Individual people are just waiting to see. They want to know, they want to be sure before they put their money into something like Bitcoin. And by the time they do, the price is going to get so high and there's only going to be so much left over because it's a finite asset that, the sovereign wealth funds like Saudi Arabia and companies like MicroStrategy and 21, and they're going to have all the Bitcoin, and there's not going to be a lot left. And the supply and demand model is going to make the price per coin be so high that it's going to be very difficult for people to get even small parts of a Bitcoin without coming out with a lot of capital in order to do so. It's just the unfortunate reality of the world that we're living in and how people view finance. This is a very interesting story. If you want to put this up, Rich, we can kind of talk about this. I don't know if you saw this news. Did you see this?
I did not see this.
So CERN just turned lead into gold and then watched it vanish. So before people get like really, really excited and say, oh, see, we can turn lead into gold. Gold is gonna be so abundant and all that. It was literally like nanoseconds. They did it for like literal nanoseconds and then it disappeared. So they didn't do it where they're just like they got their CERN warehouse where they're just literally bringing in lead and turning it all to gold and shipping out the gold. That's not what's happening. But this is the first time in history that they were able to do this, to figure it out, and to at least do it for the small amount of time that they did.
So what do you mean it disappeared? Because I didn't read the article. It's just gone? Or did it turn back to lead? Or did it just disintegrate? Or what? I don't understand. This is like some sci-fi shit happening now.
It really is. I mean, it's literally, if you kind of read a little bit of what a newly published study in the Physical Review journal, scientists from CERN Alice experiment have observed something extraordinary: the transformation of lead into gold inside the powerful, large Hadron Collider. LHC. For centuries, alchemists dreamed of turning lead into gold, known as chrysophia. This ancient quest was based on the idea that both metals were heavy and shared similar properties. Of course, now we know that lead and gold are completely different elements, and no chemical process can turn one into the other. In the 20th century, nuclear physicists revealed that atoms could change from one element into another. This could happen naturally through radioactive decay or triggered in laboratories using high-energy particles. Going further into the article, it was basically the results show that the LHC currently produces gold at a maximum rate of about 89,000 nuclei per second from lead collisions at the Alice collision point. Gold nuclei emerge from the collision with very high energy and hit the LHC beam pipe or kilometers at various points downstream, where they immediately fragment into single protons, neutrons, and other particles. The gold exists for just a tiny fraction of a second. So they're at the very, 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 very early stages of figuring out how to do this, but they've at least figured out how to make it do it for nanoseconds. I don't know what the next step is. I mean, before I actually saw it on an X article, and somebody basically obviously clickbaited it by saying we can turn lead into gold now, which made me think that, oh my God, like gold's going to, like, obviously you're thinking you're going to turn all this lead into gold and gold's going to be abundant and go to zero. But when I did some further research, it's basically they figured out how to do it for a tiny nanosecond.
Stuff, like when they've been able to generate energy. This is the same thing when they try to generate energy. Fission. When they're trying to do, fission, they've been able to. They're finally. All these things are steps, and it's probably years and years and years away before they can get it to be more stable. It's the same thing that they've tried to do with like fission or the self-replicating energy sources and stuff that they always talk about. That, I mean, it's cool that they're doing this research. I mean, it always leads to other cool developments too. All this stuff always ends up having offshoots into other industries, so that's cool.
Yeah, this
So
is
I don't need to start buying lead
no,
and
no.
stockpile. So will the lead become more? So it's funny. The gold price will go down, but then the lead price would go up, right?
This is
Because
a
everybody will be buying lead
I know.
because they want to hear the gold. Just buy Bitcoin. That's
Yeah,
you now, right?
that's
Just
the
buy
point.
Bitcoin.
That's
you
the
don't even
point
have,
of
you don't need a lab for that.
that's the point of bringing this up. So to put a bow on it, at CERN, scientists used the Large Hadron Collider to smash lead atoms together at near light speed. In the process, they briefly turned lead into gold by knocking out 3 protons, creating 86 billion gold nuclei for a split second before they broke apart. It was a glimpse into atomic transformation at the most extreme scale. I wonder how much money that costs to do that for that small amount of time where they're kind of figuring this shit out. But, you know, to kind of bring it back, you know, talking about gold and Bitcoin and gold having its little run like it's had the last year. If you take a look, you know, when you invest and you're doing investing, you should really zoom out on your, you know, the chart that you're looking at of whatever asset it is that you invest in, and don't look at like the short time frame periods. Don't look at the daily candles, the monthly candles, and all that kind of stuff. You want to take a long, broad view to see like how that asset is actually performing. This is a cool video. I think we've shown it before, but I can't remember. It shows how gold performs when put against Bitcoin starting back in 2018. So $50 weekly dollar cost averaging starting in 2018, gold versus Bitcoin. So we'll just take a look really quick of just this 49-second video with this nice, cool like techno music, and then we'll just talk about it after. Nice little techno music to get your Thursday afternoon going here. So if you take a look,
What was the time frame of that?
2018. So if you started in 2018, the number of weeks would have been 384 weeks of dollar cost averaging. So you're averaging, you're putting $50 a week into both gold and Bitcoin from 2018 till today. So that's a 384 week time span. The total amount of money invested, the $50 times 384 weeks, is $19,200. If you put that into gold, you would have 11.083 gold ounces today, worth USD value of 35,821. So you would have almost doubled your money. You would have made what, like 75, 80% on your money by doing that. The same 19,200, the same time frame, 384 weeks, the same $50 that you're putting into Bitcoin would have got you 1.3646 Bitcoin, worth $142,129 today. So you can see, and as the music was playing and you were watching the, you know, the chart kind of do its thing, you saw the two assets kind of close for a while, and then Bitcoin just basically take off. But this chart is really good, and I wanted to talk about it and show it because this is a good example of the power of dollar cost averaging and the power of just having conviction for an asset, making your normal, regular investing into that asset, and just not listening to all the noise that's going on around you. From 2018 to 2025, plethora of noise in both Bitcoin and even gold to some extent. But definitely in Bitcoin. Like you're talking about 2018 being the beginnings of the depths of that bear market from that 2017 run up to 20,000, going all the way down to 3,000 and then having that run up in the 2020 COVID, going up to, or actually hitting 3,000 in 2020, going all the way up to 2021, hitting 69,000, going all the way back down to about 15 or 16,000 in 2022, and then all the way back to where we are now. So there's a lot of volatility, but volatility is your friend when you're dollar cost averaging into a good asset. So in the case of Bitcoin, $50 every single week for 384 weeks would have been $19,200. Now think about this for a second. Think about it pragmatically. If you're working a job, okay, and you're talking about putting money into your 401k, let's just pretend 401k or IRA, $50 a week would basically be like $200 a month that you'd be putting into your 401k. If you would have invested $19,200 into a 401k or an IRA starting in 2018, what are the odds you would have $142,129 today in that? Probably almost zero. There's literally, well, it is zero because Bitcoin's the best performing asset of the last 10 years. So making these, and people are like, oh man, I'm late. I can't afford to buy one Bitcoin for $104,154. I can't afford to buy even a tenth of a Bitcoin at 10,000. This person in 2018 was making $50 a week DCAs. He was making $50 a week DCAs when the price of Bitcoin was in the 50s, the 60s, the 40s, the 20s, the 30s. He started at zero. He started at zero in 2018, invested $19,200 strategically, and ended up with $142,000 of value doing that and continuing. So I want people to think about that today. And I often hear like, oh, I'm too late. Oh, it's too late to get in or whatever the case. Like, even if you can only do $25 or $20, whatever the case may be, if you just get very, very serious and very, very methodical about what it is that you're going to decide to do, dollar cost averaging into Bitcoin, you can start with 25, 30, 50, 100, whatever the case may be on a weekly basis, and just start buying every single week. Set it up. You can do that on most exchanges. You can set up a dollar cost averaging strategy and just watch how your portfolio performs when you do that in an asset like Bitcoin that just performs with a CAGR that just blows everything else out of the water. It's good sometimes to just zoom out and take a look. Like 2018 wasn't that long ago. I mean, you're talking about 8 years ago. 8 years from today is 2033. Like 2033 is, before you know it, it'll be here. Like $50 a week. Who knows what that'll look like, dollar cost averaging into Bitcoin in the next 8 years. I mean, do you want to sit here in 8 years from now, saying, I'm too late when the price of Bitcoin is 800,000 a coin, and you're just like kicking yourself when you're like, man, I should have been putting $50 a weekend when it was $104 a coin, and just imagining like at this point here, if you're dollar cost averaging $50 every single week and you're 8xing your money, and you put $19,200 in 8 years from today into Bitcoin, and you have an 8x in that money, you might have $160,000 of value just by doing that. So think about like the potential of every $50 you're putting into Bitcoin or every $100 you're putting into Bitcoin, that being like an 8 or 9x. Like you're really going to be you're putting 50 in to get 400 or to get 450 back on the other side of your investment. That's how you have to think when you're investing and you're putting money into a scarce asset like Bitcoin. What do you think, Rich? Any thoughts on that chart, that strategy? I mean,
it's definitely like, we've seen that chart before, but I've never seen the video before. I definitely would remember the ticker music. I gotta turn my mic on. Sorry about that, man. I'm falling apart over here today. I've seen that chart before, but I haven't seen the video before, and it's just one of those neat things. Like, there's so many ways you can all these. You gotta see. People just, what is it? You sense like, oh, well, I just think that art's going to appreciate it, or real estate's going to appreciate it. It's like, it's passionate. Like you're passionate about something because you have some vested interest in believing what you think is true, instead of looking at other things and being open to what other possibilities out there, instead of just being locked into the mentality from like 2000. You know what I mean? Like I feel like you've got to you've got to pay attention to what your options are out there. Whatever type of investing you're doing, you do have to pay attention to, what are, I think, well, okay, you can think all you want, but what's the facts? Like what actually, that chart is one of those things that's like, okay, it's not a pyramid scheme. It's not a, you know what I mean? Like that's the stuff that's the way I look at it. Like this is a lot of growth. It's not a flash in the pan. It's here to stay, and it's here to grow. It looks like it's going to keep growing.
Yeah. I mean, it's hard when you're looking at, the chart and you see that big number. You see 103,000 wherever we're sitting at currently in the price of Bitcoin, and you're like, man, I don't have, like, most, even if you think about it, like how many millionaires are liquid $100-something thousand to put into Bitcoin right now? Like you could have a net worth of 2 million but not have 100,000 cash. Right. You probably have to liquidate some sort of assets to be able to even buy that one coin, let alone people that are 100,000 or less, middle class people.
That's the problem for like even simple stuff, folks like me. Like, you always hear, you go to a bar or something with someone. I bought Apple in '81 and I should have kept it and I sold it and I wish I would have known. And, like, it's one of those things like people always talk about. Like, I wish I could have invested in whatever, Microsoft, whatever it was, and like I had a chance, and that type of thing. It's like, well, pay attention and do your research. Like, it's not, people aren't going to call you and say you should just, like, you kind of have to know what's there and be open to some different ideas.
25 years ago, Amazon IPO'd. You know what Amazon's IPO price was? $18 a share.
Right.
$18 a share. They're up 272,000% since they IPO'd. If you would have,
people like me, like, if the thing with that stuff is, it's like, sure, everybody, but unless you really are spending the time and you're doing the research, you're not going to know that exists. And you may also not have been liquid enough. Like, most people aren't liquid enough to actually have had enough of money to significantly invest in it. Like, even now, like, I think for someone like me, where I am, how do I take the money that I have and do I invest it into something, whether it's Bitcoin or whatever? Like, it's a scary thing when you're late 50s, you're retired, you have a side job. Like, what happens if I'm wrong? And that's the scary thing, I think, for a lot of the regular guys. Because we don't spend the time like you do. We can't follow the trends. We just don't know.
Back to the Amazon example too. If you would have invested $1,000 in Amazon in 1999, it would be worth $3 million today. But here's the thing. That initial $1,000 that you put in would have had an 80% drop shortly after you put that $1,000 into the stock. So you would have had to, like you said, conviction. Like, you would have had to have an insane level of conviction, and you would have had to really, really understood what it is you were investing in and seen the future of what Amazon was going to be, which I don't know how many people could have done that. It's not just understanding
what Amazon was going to be.
The world
was going to be.
Yeah.
Like, I don't think a lot of people would have believed if you told them in 98, 99 that in 25 years, 20 years, people will just be buying everything through the internet. And I think, like, if you invested that $1,000 and you're the person that invested that $1,000 and you stayed with it, you probably, like,
we're dead.
Died. Dead. Or you really didn't expect that you were just taking a chance that I could afford to lose that $1,000. Right? I think, like, you know what I mean? Like, if you went out one morning and said, I heard about this Amazon thing, I'm going to go and boom. And I'm sure there's people that did that with other products or corporations like AOL, Blockbuster, whatever, that have come and went, where people just didn't, for every Amazon that there was, what were the other ones that were similar things you could have also spent $1,000 on that are gone? And we know what a lot of them are.
Pets.com, Ask Jeeves. Yeah, of course. But here's the thing too, like, you have to recognize, and this is the biggest one of the biggest anti-Bitcoin arguments is like it's too volatile. It's too the price gyrates too much for me. I can't stomach it. And it's like, what do you think Amazon did? What do you think Nvidia did? What do you think Tesla did? Like all these stocks, these traditional investments, they had a lot of volatility before they stabilized, right? So volatility is vitality for these stocks. Like you can't get a stock to go from $18 a share to thousands of dollars a share without insane volatility along the way. Like you're going to go from 18 and you're going to hit 100 and then it's going to go from 100 to 70 and then you're going to go like here's the thing. There's no difference between the price going from $100 to $70 than the price going from $100,000 to $70,000. The percent change is exactly the same. The only difference is the amount invested in the amount that you have as the asset of the overall portfolio balance. But a 30% drop is the same at $100 to $70 as it is from $100,000 to $70,000. But people look at the $100,000 drop to $70,000 much differently than they do from the $100 to $70, which comes into the reason why people just look at investing overall with the wrong set of goggles on their eyes.
People look at investing, like you said, from a big picture standpoint, looking at a number instead of a percentage. Like you're right. Like I know enough about math, having taught it and understanding mathematics, that people, if you just zoom in on a chart or zoom out from a chart and you forget the scale, forget what the bottom says and forget what the left side says, and just look at it and just look at the trend, whether it's, that's to me, I agree with that completely, that you can't look at it from the standpoint of the total dollar figure. You have to look at it from what it's doing, whether I have one Bitcoin or a hundredth of a Bitcoin, it's the growth that whether and any other stock, Apple, whatever other tech stock, or the opposite, that it shrunk, and that's the thing. Like if you're looking at a stock, if you're looking at that graph, there are those people that'll be like who seem to know when to get out, or when to get in, if that makes sense. You know what I mean?
Yeah, the trading is it's I have my own feelings on it, and I sometimes I feel a little weird when I give my feelings because I would fall in the category of somebody that has not done any sort of research. I don't watch charts. I don't trade. What I do know is just the math, and the math is that like 98 or 99% of people that do trade lose money in the long term.
Oh yeah.
It's just you're all the money goes to the 1 to 2% of the people that do the intense, methodical, obsessive work to read charts well enough to be good enough to win more than they lose, and all the money flows to them.
And the funny thing is, like, we know we've compared over the times I brought up art and real estate and all those things. If I bought a Van Gogh, okay, probably I couldn't buy a Van Gogh. So I bought something that's not a Van Gogh.
You can on Masterworks, you can buy a piece of one.
Right? But let's assume I could buy like whatever the discount Van Gogh is. I'm not an artist. So I find out that this is the one I should invest in. But my goal is to buy this one, and then I'm going to sell it so I can buy like the next guy, so I can get to Le Renoir, so eventually I can get to the Van Gogh. Like people wouldn't do that. Like most people wouldn't. Like I know I'm just going to sit on this. I'm going to put it in a vault or wherever they do whatever the cold storage version of art is. Like like in some of those like movies that you see where they store it.
Yep.
And it's like you're not trading it. You're not taking that art. You're holding that art because you believe that it's going to accrue in value. And I feel like that's the difference between what I've learned in 2 years or whatever it is, watching you and listening to you and reading my own the stuff that you told me I should look at just on the pod that I went and looked at, and I'm like, oh, okay, it makes so much more sense than the guy that thinks he's going to be a day trader that's going to I'm going to trade it today and then double it, and then tomorrow I'm going to double it again, but I'm going to sell it and buy it back, and it seems like it just doesn't seem like that ever works.
Can you read the comments? Because I can't quite see. There's somebody commenting something.
Shirley Sound says, hey, people are often misinformed and obviously do not think for themselves or do their own research.
Of course. Yeah, absolutely. Like the social media. Thanks for the comment, by the way. social media just it makes people think in many different aspects of life, but it makes people think they're better than they actually are at many different things. And one of the big ones is, unfortunately, is like trading. Like, it's one of my biggest pet peeves that I hate about crypto and some Bitcoin influencers is how they make it sound like it's so easy to, like, oh, well, make sure, like, if you're going to leverage, always do it responsibly. You know what responsible trading is? Not trading. That's responsible trading. You shouldn't, there is no number that you can put on that's like, you can lose, or like whatever like you're throwing your money away. You're not going to win. It's a complete waste unless you make one trade and then never trade again and take that profit. You're eventually just going to lose it all anyways.
So I think Shirley Sound and you are saying the same thing. Like, people pay attention to things, like they pay attention to the wrong things. They get some bad advice and they follow
Yeah.
it, or they just hear something or see something on the internet and then it becomes their own opinion instead of don't trust, verify. They're and I can tell you, I have this experience just recently, completely unrelated to finance. I was somewhere with a bunch of people like 2 months ago, and I compared something to something, and was with these same people 2 months later, and one of the guys with used what I had said to him 2 months ago, and he said it like with conviction that it was his. And I didn't say anything. I got back in the car. I says, remember when she's like, yeah. I'm like, I said, my wife is like, that was mine. He stole that from me. I don't know if it's right, but it may be completely wrong, but he re-quoted like 2 months later or whatever it was, something that I had sent to him. And it's really funny. Like, that's what the internet is. The internet is people making up opinions, stating them, and then you and I saying, well, that makes a lot of sense, so I'm just going to re-quote that. I'm going to retweet that.
Nobody has a monopoly on truth. And I think, unfortunately, many people that have I say this with a microphone in my face and a camera on me right now, but most people on social media with a camera in their face and a microphone in their face think they have a monopoly on truth. And I say this, maybe not often enough, but like, don't believe everything I say. Always don't trust, verify. Verify everything I say. Call me out when I'm wrong. I'm going to be wrong because I'm human. I don't have a monopoly on the truth. And some of the things that I say are probably more opinion than fact and truth as well. Like, nobody has a monopoly on it. And I think we are stuck in this vortex of false beliefs where people really believe they have a monopoly on the truth. They think like everything that they say or are told is just fact, and there's nothing that you can say. And if you disagree with them, then you're like an enemy, or you're considered to be another party of politics, or you're just considered to be a supporter of this thing over here. It's like you're not allowed to be a free thinker. That's for damn sure. Like, being a free thinker is completely out of being in vogue in the current set of 2025 that we live in. You have to think super rigid. If you're here and you're in this flock over here, there's no way you're allowed to think anything that's outside of that flock and how they believe and how they operate, which I despise.
And again, I was in for education for 31 years, and it was the same thing. Like, something new would come out and everybody would go hard on these things that come out. And this is the way to teach kids. This is the way to teach kids to read. And a lot of these philosophies were marketing campaigns. These were like, I can sell 1 billion books. I can sell this as not can I sell the books? I can sell the program. I can sell myself going around giving speeches about why this thing works. And then all of a sudden, 5 years into it, we're like, wow, the numbers really aren't panning out, that this is actually a technique that works. And this is not just in education. This is in business. This is in investing. This is in real estate. This is in everything. But the guy who's really good at selling that program is going to get rich off of it.
Education is a great example because the model of K through 12 was created 200 or 300 years ago. And when it was created, that time period, you were creating people to go work in factories. It was during the industrial age.
Even the concept of public education was like, why did it start at 9 o'clock? It started at 9 o'clock because it was easier for people who had 9-to-5 jobs, but also even when it was more rural, it was because they needed to do the shit on the farm before they could go to school. So, and all the, everything that a research is like, so for example, in education, like teenagers, Teenagers use, like, if you were a teenager, and I'm saying like 300 years ago, and you lived in a village, the teenagers were the ones that guarded the village at night. The reason why is because their bodies were wired to be up all night. But now we've had a school system where, like, look, the little kids go later and the older kids go earlier. And it's flip-flop from every bit of brain chemistry and research that's out there. But because we have a system that runs this way, we run it this way. And I know this is a financial concept.
No, it's good because
but it's the same stuff.
we're
We're following an apparatus, we're following a bureaucracy that's designed a certain ways. And anytime I've tried as an educator, or we tried to redo things and say, well, why don't we this? And well, we can't. We got football at 3:00. So, like, other things that were important drove educational philosophy. Busing drove educational philosophy. Like the bus company. Why is the bus company so powerful? And I would guarantee you, if you went into Iowa or California or Texas, it's the same crap. The bus company or the bus schedule runs we got to figure out how to drop off the one set of kids to pick up the other set of kids. So we don't have 90 buses. We got to use the same 45 buses to pick up all the kids. So, because it's too expensive. So we drive policy in public education as well in municipalities based on external forces that have nothing to do with what the end product's supposed to look like.
I can tell you just from the school that my kids attend that basically they start the middle school and the high school so early because they use the same buses for the middle school and the high school. So the elementary school kids have to start like an hour and a half later just because of that.
Right.
All because of the busing.
Yeah.
Nothing to do with any data, no research. It's just like, no, busing. That's why we're gonna do this. Yeah, I've been super vocal about all the problems that I see. Our educational system is completely broken. It's to me, my opinion, it's a complete joke. It's hard for me to take it seriously at all. I think the way that they have set it up, every other aspect of life has technologically advanced except this one. The fact that we still, and even taking it a step further, the fact that we still, with the advent of technology that we have, with people basically on their laptop taking higher education classes, that you still need 4 years worth of classes to get yourself a bachelor's degree, even some that will fast track a little bit faster online, but you're still taking the same amount of classes. The fact that they haven't eliminated some of that nonsense is just, it's ridiculous. I don't want to get too much on a tangent on that, but I've been very vocal on the fact that I think our educational system is a complete joke in this country, and that's why we are way below many other countries when it comes to education.
And it's not just like, and I don't care if your kid's in a public school or a private school, it's all the same stuff. Like, you can send your kid to a private school, congratulations, and all that stuff. It's great. No issues with you, but they're still doing the same thing in the same way. They're still prioritizing. If you send your kid to one of our local big expensive Catholic schools that we have here in Western New York, like, you send your kids there, like, there's a huge budget for the football team. Like, we spend a lot of money on things because it's a great way to get investors to invest back into the school. And again, I can only speak to education because I worked in it for so long, but I see the corruption in the system. And if I think I'm a smart enough guy that I've worked in finance for 30 years. I think I would be able to recognize the same thing. I think I would, because I think I'm a smart enough guy, just because, that doesn't make any sense. And it's funny when you talk to kids in education, and I bet you if I talk to professionals in finance like I talk to you, they'd be like, why do we do things this way? But we're small voices, and we can question things. And, Shirley Sounds said, I love free thinking. It's like, it's the same thing. It's like we try to have a voice, so we can't, but no one listens to us. So,
yeah,
that's why things like Bitcoin and crypto, I think, are attractive to people, because it's a way of kind of breaking free from the system, charting your own path.
Yeah,
and not being dependent on us.
The money's broken, and as a result, many other aspects are fragmented in the system because of that broken money. You're seeing it in a lot of broken systems places
in this country.
Yeah. I got this up here too. As we were talking about Amazon, as we were talking about volatility, United Healthcare is getting absolutely obliterated as a stock. The largest health company in the United States, which is United Health, is down 50% in the past month. Let me take a look really quick because that was before the open, that tweet. It's down another 11% today. It's just getting absolutely destroyed. So I mean, there's even the biggest healthcare stock is seeing an 11% drop, losing half of its value in the last 30 days. Like, lot of and healthcare is another one. It's another system that's severely broken, and that directly has to do with our money being broken and the payment model for healthcare, and having such a significant dire effect on individuals and families because of how broken our healthcare system is. And, these companies are starting to pay the price. And some of the things that the current administration is doing is having some downward pressure on companies like United Healthcare, and good. I don't feel sorry for them. They should be held accountable, and some of these systems need to be fixed. I mean, it just does. Let's go to this. This is Mexican billionaire Ricardo Salinas. Shares his portfolio. 70% gold. 70% Bitcoin, 30% gold, no bonds, no stocks. His advice, buy the Bitcoin dip. Think 10 years because it's a limited asset. Dollar cost average monthly to remove uncertainty, which is the chart that we just showed a little bit prior. This is a minute 39 clip. Let's listen to Ricardo in his own words.
Personal portfolio, the one that I manage myself and that I get to call in what asset I'm going to allocate to. Yeah, I'm pretty much all in. I got about 70% in Bitcoin-related exposure and 30% in gold and gold miners exposure. So 70-30. That's it. I don't have a single bond, and I don't have any other stocks, except my own.
Right. So on Bitcoin, I think we're down about 20% since the Trump inauguration after a big rally post-election. So buy the dip or wait?
Bitcoin, you have to think 10 years and buy everything that you can. It's not going to go anywhere except up because the dynamics are such. It's the hardest asset in the world. There's only 21 million of those tokens, and 20 have been distributed and mined already. So there's going to be 1 million more from here to 2040, I think, 2140. So it's the hardest asset. Not even gold is this hard. Gold gets inflated at about 3% a year through additional production from mines. Bitcoin doesn't. So yeah, it will go up and down, and there'll be speculative frenzies, and people will talk about it. But what most people should do is average dollar cost average, which is have a program where you can buy so much per month, and you buy every month.
So yeah, I agree with Ricardo, and he's another one of the billionaires out there that are sharing that they are also allocating a lot of their wealth to Bitcoin. I mean, if billionaires are starting to do it, it probably would be a good idea to take a look at it if you're not a billionaire, not financial advice. But the idea of dollar cost averaging is just, I can't stress enough how powerful that can be for someone who's just trying to get off zero and start to accumulate some Bitcoin. It's just a very simple way. You don't have to worry about, trying to time it, catch a dip. Oh, the price went up or the price went down after I bought. Just certain amount, whatever you decide, whatever that is, weekly, just set it and forget it and just watch your portfolio grow. Ricardo nailed it. There's only 21 million, 20 million of which have been mined in the next, 116 or so years, 114 or so years. The following million will be mined. It's only going to get scarcer and scarcer. At this point, with all the institutional adoption, with all the news, sovereign wealth funds, BlackRock, if you're an investor If you invest on any level and you take it, like, I mean, there's people out there that just don't invest. And obviously we're not talking to them. If you're not putting any money away, you should be. That's a whole other conversation. But if you're already actively investing in some sort of way, I don't know how you don't at least take a look and start to do some research at this point in 2025, over 100K Bitcoin. It's obvious what this thing's going to be doing. To anyone who's done any sort of research, take a little bit of time. If you're skeptical, that's good. You should be skeptical of everything. You know, we live by the ethos of don't trust, verify. So go in and verify, see how this thing works, read the white paper, talk to some people, talk to some Bitcoiners, jump in some Bitcoin spaces, watch some podcasts, not just ours, watch others, and learn. Because if you don't, it's going to be expensive, very, very expensive to not learn. If you're under 40 and you're not doing this research, you're gonna be hurt by this, in my opinion. If you're in your 20s and 30s and you're not at least taking a look at this, I'd hate to see how you're going to look at this thing in 10 years, 15 years, 20 years, and really, really feel about being late to the party. You know, we do this podcast on a weekly basis to give information to you know, I love to talk this stuff. I love to give the information. I love to interact. There's many other podcasts out there that are doing it as well on a greater scale and a larger scale with a lot of good information. The information is out there. It's your job to find it, research it, understand it, and start allocating towards it. Because Saudi Arabia is doing it, BlackRock doing it, Ricardo Salas, one of the biggest billionaires, the biggest billionaire in Mexico, is doing it. And there's many, many other stories of other multi hundred millionaires and billionaires that are doing the same. If you want to change the trajectory of your family and allocate more resources to things in the future for your family, it's not going to be through an IRA and a 401k that you can't touch until you're 60 years old. I'll tell you that. That ain't it. You might be able to retire with a modest income, but if you want to play in the big leagues, if you want to be in the next technological revolution and you want to be there, one of the people sitting at the table, it's going to be Bitcoin. It's just, this isn't me, Don, some nobody from Niagara Falls telling you this. These are the movers and the shakers, the Larry Finks, the Ricardo Salinas, the MBSs. Those are the people that are telling you. You don't listen to me. Listen to the guys with money and where they're putting that money and that value. We'll end on that note. As always, don't trust, verify. Thanks for watching. Please follow. Check out our Gemini link that I'll have in the description. Check out the free cash link that I'll have in the description. See you next week for episode 87. Peace.